can keep one for the moderators
Yeah.
and one for the stage there.
Right, thank you. So now you are the director.
Yes.
Yeah.
Quite a bit of change.
Good,
Let's
good.
discuss it. I'm here until 20th.
Okay, okay, good, good.
Yeah.
As we have learned, it's okay. Mixed bag.
Well, there's nothing in the EU pavilion, is there? Oh, the negotiation. That's, okay, because I'm deliberately avoiding it.
Good morning. I think we should just start now. Helena, is that okay? You can hear me, yeah? Hello? Can you hear now? Is that good morning? Good morning. All right. Yeah. Okay. All right. So. Very good morning, distinguished participants, colleagues, and partners here. My name is Nishant, and this is both a pleasure and a privilege to welcome you all to this workshop on the Global Trust Fund on Sustainable Finance Instruments. The focus of this event today is about how thematic bonds are helping in closing the NDC and SDG financing gaps and addressing one of the most critical pressing challenge of our times, that is mobilizing finance to accelerate sustainable development. Today, we will discuss how to scale up thematic bonds and the important role that the Global Trust Fund on Sustainable Finance Instrument is playing, which is this initiative is supported by the government of Luxembourg. Once again, I welcome you to this workshop and thank you for being part of this important conversation. Before we take a deep dive on today's discussion session, it is my great honor to invite our distinguished keynote speaker, Dr. Claudia Hite, advisor on climate change and sustainable finance from Ministry of Environment, Climate and Biodiversity, Government of Luxembourg. Please join me in giving a warm welcome to Dr. Claudia.
Almost got suffocated there. Okay. Thank you so much. It's such a pleasure for me to be here. I hope you all come to visit very important country of Luxembourg. All right. So what I wanted to talk to you about today was first what Luxembourg has in store in terms of international climate finance, and then also talk about the GTF. And then I wanted to mention another project that I recently heard about from the GGGI. So to start off, Luxembourg is a tiny country, but Luxembourg is one of the highest per capita donors of international climate finance. So we have our international climate finance comes on top of the 1% of GDP that goes to official development assistance. And we have our current ICF strategy is coming to a close next year. We have an envelope of 220 million euros over a 5-year period. And one of the things we give to, it's accessible to all developing countries, but we have a focus on SIDS and LDCs. And also we have priority funding themes like natural capital and biodiversity, community-based adaptation and resilience, resource efficiency, and leveraging climate and sustainable finance. We recognize, of course, interlinkages between climate and biodiversity finance. We've been in close communication with the colleagues that just came back from COP16, all energized for biodiversity finance, nature-based solutions. And I understand that GTF is one of those mechanisms to combine the two and really help solve both of these crises. We are the second largest investment fund location in the world with 5.5 trillion euros in assets under management in investment funds. So we know that finance plays a big role and that Luxembourg can have a big impact when it comes to transitioning this finance. We've been active in really trying to support the sector in this transition. It all started back in the early 2000s with the creation of LuxFag, Luxembourg's finance labeling agency. Its first label was a microfinance label, has a number of labels right now. We're very proud of LuxFag and the activities they are doing, also in trying to help funds get these labels. We have the Luxembourg Green Exchange that was set up in 2016 as part of the Luxembourg Stock Exchange, issued the first climate awareness bond by the EIB. And we have a number of initiatives in Luxembourg, like the EIB, a Luxembourg Climate Finance Platform, International Climate Finance Accelerator is one of my favorites, really trying to get impact finance with projects in the Global South, beginning fund managers. It's a way of really trying to get impact finance funds started. And one of the things that we're proud of is the launching in 2023 of the Global Trust Fund between the Grand Duchy of Luxembourg and GGGI. The GTF aims to close the development financing gap, so right on track with this COP, by leveraging capital markets potential to promote climate change mitigation, adaptation, and nature-based solutions. So with the GTF support, GGGI provides technical assistance and strengthens national green finance ecosystem. So it really helps countries get access to this this funding, which is one of the main themes of this COP. Not just what kind of do we get enough money, but how do we get that money into the right hands. So GGGI then develops policy frameworks, has capacity building training, and delivers pre and post issuance of the thematic bonds. What the GTF will do is avoid 130 million tons of CO2 emissions, enhance climate change resilience of 2 million people, and support the creation of 400,000 green jobs. GTF is currently supporting governments and prospective issuers across 14 countries, and growing, I'm sure. And at the end of October of this year, GTF had facilitated $765 million in thematic bond issuance from first-time issuers in developing countries. I mean, this is really important. First-time issuers in developing countries. That's exactly what we want to see. With an additional $1.5 billion in issuances expected by mid-2025. Way to go. Okay. I will go off script now and tell you a little bit about what's going on in the negotiations. I feel like we've had a mixed results so far in the first week. It was shortened by 1 day because we adopted the agenda a bit late. People were working very hard late last night. Today is the last day of the SBs, so we're trying to close out as many agenda items as we can, because only a few of them can be taken forward into next week. And I know this is the finance COP, so the focus is, of course, on the NCQG, the new collective quantified goal. What will it look like? What will the amount be? Will there be different priority areas, the broadening of the donor base, etc.? But I wanted to draw your attention to one other thing that's going on at this COP, which is, of course, that we're looking towards the end of February deadline for countries to submit their nationally determined contributions. So this will show us whether we can stay on the 1.5 degree pathway. And the NDCs are supposed to be investable, investment ready, okay? And so I was really pleased to get to talk to Nishant and Annika at a Luxembourg event on Thursday evening, where they told me about the carbon neutrality blended finance facility, which does exactly this, which helps countries make their NDCs investment ready. Okay, so for example, translating something like a 30% renewables by such and such date into concrete projects. So I really hope you look at that so the CNBFF that's coming out. I think this would be a great way to contribute to the transition. So with that, I would like to thank you all for being here on a Saturday morning. And I'll hand back to Nishant.
Thank you, Dr. Claudia, for your very enlightening and thought-provoking comments. Now it is my distinct privilege to introduce our second keynote speaker, Ms. Helena McLeod, Acting Director General, Global Green Growth Institute. Please join me in welcoming Ms. McLeod to the stage.
Fantastic. Thank you. It is lovely to be here today. I am so passionate about this area of sustainable finance. And in terms of GGGI's work, I think it's one area that I can see we are influencing the global architecture with our very dear partners, Luxembourg, as champions. Yes, finance. In a way, it's all about finance and, of course, how that finance is spent. So we do put a lot of effort into how the finance is spent. But, of course, if the finance is not there in the first place, there will be no money to put behind the NDCs. In terms of where this originated, the Global Trust Fund concept, it was at the time of the COVID pandemic. And the economic downturn really impacted many of our member countries. And we have about 64 member and partner countries around the world. We have operations in over 50 countries globally, from Latin America all the way through to the Pacific, Asia, Africa, Middle East as well. In terms of the financing gap for the SDGs, it's been estimated at about 3.9 trillion. And simply there is not enough public money coming to climate finance and SDGs to meet anywhere near that gap. But if you look at how much is in the global financial market, the bond market represents the main source of this, and that's $135 trillion. So only 2.8% of that, if shifted towards SDGs and climate issues, would actually meet the current need. Now, 2.8% seems reasonably manageable, but it's all about pace, it's about scale, and it's about quality. And that's what the Global Trust Fund does. So the quality of the bond issuances are at the highest. All of the bond money goes into the most significant areas that will make those impacts. And the post-issuance work ensures that the money is directed to where it has been identified to be going. Now, Claudia, thank you for those wonderful words. And you mentioned some of the impacts, so I won't go through them again. But I'm going to say a couple of things. One is that I visit a lot of countries. It's lovely to have our colleagues here, and from Ecuador as well, from Uzbekistan, from Nepal, Sri Lanka as well. Yes, of course, our bond work in Sri Lanka. So I visit the countries, and one thing that I find fascinating about the GTF is the catalytic effect that it has on the whole of the market. I'll give you an example. I was at Paraguay last year announcing their first green bond in the country. Immediately, 5 different financial entities came up to me afterwards and said, could you work with us on a green bond? It is quick. It is like a wave that can take over the world. Now, we have the 765 million issuances already under the GTF, and we will hear about some of those today. In terms of the pipeline, it's got a really significant pipeline. I think the pipeline's standing currently at about 3 billion. What have we got coming? We've got the first sustainability-linked bond by the government of Thailand coming. That's going to be between 600 million and 1.6 billion US dollars. That will be coming hopefully very soon. We have the second tranche of a green bond in Cambodia. That's for 10 million. Now that's an LDC. It's a fairly small market, but it's incredibly significant. And this year I met with the Securities Exchange, and they were so thankful and excited about these bonds, because every time a bond is listed, it has to be listed on the stock exchange. So it's not just enabling an injection of bond money into either companies, because we work with companies under the GTF as well as the public entities. It's also stimulating the expansion of the stock market there. So the whole capital market is benefiting from this work. Debt for Nature swap in Ecuador, we're hoping to have another one that aims to restructure about 2 billion of Ecuador's outstanding debt, and I think we'll hear more about that later. On Sri Lanka, again, green bond issuances with the National Development Bank, and we will be hearing about that as well. We have a blue bond issuance by the government of St. Lucia for an estimated amount of 20 million that is coming through. Now, these are just a few, but what I'm doing is giving you a sense of the difference in markets. So we have large markets, like Thailand is a relatively large market. We have a relatively large market in Uzbekistan. We have smaller markets in like the LDCs, but we also have small island developing states. So you can see the range of countries that can benefit from this. So I'm really excited that the target of 2 billion that we initially agreed with Luxembourg, we believe we're going to achieve significantly earlier than the original time frame of the program. And so we're in discussions about how we can accelerate, amplify, do more in terms of raising that target potentially to 2 billion and how we can enable that. So the door is open because we have how many trillion to change into green? Did I say 130 trillion plus to turn green? But that is the opportunity that we are being presented with. So I want to thank, yes, our partners Luxembourg, but all of the countries here. It's been wonderful working with all of you. As you know, we sit in your country ministries wherever possible. We work hand in hand with you with technical assistance. You are the champions. You make it happen. And it's a privilege and an honor to work with you every day. So thank you very much. Thank you.
Thank you, Helena, for your insightful comments here. We are now moving into a moderated discussion session. So I'm going to invite all the panelists on the stage. We have with us Mr. Rilil Randhani, Director Climate Change from Climate Change Secretariat, Ministry of Environment, Government of Sri Lanka. Please, Mr. Randhani. Ms. Kimberly Micha from Ministry of Environment, Water and Ecological Transition, Government of Ecuador. Please, thank you. We have Mr. Sean Kidney, CEO of Climate Bond Initiative. Mr. Aaron Russell, Country Representative, GGGI, Uzbekistan government. And then we have someone from Lao PDR? No. Okay. Say again. And then we have representatives from the SQB Bank from Uzbekistan. All right. Thank you, Helena, for setting the stage. Today's discussion is focused on how thematic bonds are helping close the NDC and SDG financing gap. And as you know, that the financing gap for achieving the Sustainable Development Goals and the NDC targets under the Paris Agreement remains a critical challenge. Thematic bonds such as the green, social, sustainability-linked bonds have emerged as a promising financial instrument to address these challenges by channeling private and institutional capital towards projects with high environmental and social integrity. We are fortunate to have this esteemed panel of experts with us today, and each bringing a unique insights and experience. I'm your moderator today, and it's my pleasure to be here with you. And let's start the discussion session. To kick off this discussion, let me pose my first question to Mr. Lil Randani. Uh, Given the recent happenings in terms of debt management that has been Sri Lanka's, what has been the Sri Lanka's approach to NDC and SDG financing gap, and the role the thematic bonds and other financing structures can play? Over
Yeah.
to you.
Thank you for inviting us for this discussion. Um, uh, yes, for the NDCs, I mean, since we became party to the Paris Agreement somewhere around 2016, so we have prepared the NDC implementation plan and everything, and we are working implementing that with our sectoral stakeholders. That means different sectors like industry sector, agriculture, health, tourism, and all the like sectors. Then what is the main thing is that to achieve these things, the financial access for implementing these things, so that we can achieve the expected outcomes of mitigation and adaptation, and even now the losses and damages. So we have conditional and unconditional targets for our NDC achievements. For the mitigation sector, most of our things are unconditional targets, because if we get support from some other external entities, we can go for that type of greenhouse gas reduction. So what we have done is to get more mobilizing private sector into generating funds, green bonds, whatever. So, but as you know, nowadays Sri Lanka country is undergoing through some of a economic recession. So what we have done is that we have started and we have mobilized our two private sector banks, as informed by Ms. Helena. That is one is Commercial Bank of Sri Lanka and the National Development Bank of Sri Lanka. So they are getting the support from the trust fund and the Luxembourg government initiative. Thanks for the GGI for making this opportunity, because we have to experiment, and we have to develop that type of markets. That is why we are involved in that for issuing green bonds. So then we are expecting that we can close the NDC and SDG gap. So let me give some statistics on that. So these there are green bonds, thematic bonds, some green bonds, and some of the social bonds also. So the green bonds, this commercial bank is somewhat ahead. But the National Development Bank is also developing framework, because what is needed is the policy framework. So, so this green bond framework, financial instruments, institutions like Commercial Bank of Sri Lanka and the National Development Bank positioned to issue green or social bonds, Colombo Stock Exchange, and potentially in international capital markets. Recently, Commercial Bank announced its intention to issue US$ 15 to 17 million green bond via the Colombo Stock Exchange. So that is I mean, they are going to issue those things very soon. So the policy framework is the basic requirement. Now it is there. So we are getting support from the GGGI and the UN SCAP technical assistance for this, and our Minister of Finance is involved in this. I mean, we are providing support for that. Yes, that is the thing. Yeah.
Thank you, Mr. Randani, for your comments and for your response. Thank you for citing the work that GGGI has done to support the government of Sri Lanka on the bond work. Let me then move on to Ms. Kimberly. If I may ask, how is Ecuador government advancing the NDCs and SDGs through the Galapagos Debt for Nature swap initiative?
Okay, thank you very much. I'm so honored to be here today with you representing my country, Ecuador. And also, it's a privilege to be addressing this panel with the GGGI's organization about the Global Trust Funds and supported by the government of Luxembourg. So, today I will share some insights about Ecuador's 2023 Debt for Nature Swap, or DNS, as a pivotal initiative that has significantly advanced our nation's economic resilience and environmental conservation objectives. This 2023 DNS exemplifies the transformative potential of sustainable finance mechanisms in achieving ambitious and national environmental conservation goals. Central to this initiative is the protection of the new marine reserve La Hermandad, that is located between Galapagos Islands and Coco Island from Costa Rica. This is a critical corridor aimed at maintaining healthy marine ecosystems, which are vital components in our global climate action efforts. As highlighted by the IPCC, coastal ecosystems such as mangroves and coral reefs possess disproportionate ecological value, and they play a crucial role in protecting against erosion and reducing the exposure and sensitivity of biological communities in these like climate stressors like warming. Despite the significant strides that are made through the DNS, one of the key learnings is the recognition that additional funding is imperative for us, not only to achieve the ambitious conservation goals of the DNS, but also to maintain them perpetually. This understanding underscores the importance on sustainable financing mechanisms to support long-term environmental conservation. In that aspect, we have the Galapagos Life Fund, that basically is a Delaware nonprofit corporation designed to administer the proceeds from the DNS, and this private conservation trust firm aims to leverage these proceeds to attract additional impact donors funds. Our goal is to engage global partners and stakeholders who are committed to protect the most biodiverse archipelago in all the planet. So we are sure by fostering collaboration between the public and private sectors and strengthening international partnerships, will be able to amplify the impact of these DNS efforts. In conclusion, Ecuador's experience with the 2023 Debt for Nature Swap highlights the transformative impact that innovative sustainable finance solutions can have in addressing environment and economic challenges. Now, what I would like to share or invite is the international community to join us in Ecuador efforts as we work collectively to preserve vital ecosystems and advance our shared objectives for climate action and sustainable development. Thank you.
Thank you very much, Ms. Kimberly. We know that the Debt for Nature swap that has been done in Ecuador has been a landmark. A lot of countries are following that footstep. Everyone is looking forward, especially countries that are in some kind of a financial troubles on their debt side of things, using this as an opportunity to restructure their debt and also bring some nature conservation along with that as part of the transaction. I think this has been a path breaking, especially countries with high on biodiversity and also have something to offer in terms of nature conservation. Thank you, Ms. Kimberly, for your comments. Let me now invite Mr. Sean Kidney as a market observer and a trusted standard developer from the early days of the bond market. What has been the emerging trends in the thematic bond space, and where do you see this market transitioning to include any focus on specific themes like gender?
So first, Georges. Years ago, I was the keynote speaker at the launch of the Luxembourg Green Exchange. Luxembourg has done incredible things ever since that particular government, and this was the new government at that point, has brought in many changes to support green finance and green policy and has been a landmark what can be done. We're here with smaller economies. Uzbekistan has done wonderful things. The Ministry of Finance has been a champion of green finance and sustainable finance and so on. Ecuador issued the first Latin American sustainable thematic bond and so on. One of the things that GGGI could do is to help us get together a coalition of smaller countries that are nimble, that have a chance of driving this agenda forward. We have a representative of the New Zealand government, well, New Zealand Green Investment Fund at the back there, for example. I've spoken in Denmark, I've spoken in Singapore. The smaller countries of the world could emulate the Hanseatic League of Europe in the Middle Ages, which was a collection of city-states around the Baltic and North Europe who worked together to grow trade and develop a civilization when there was not much civilization in Northern Europe. This is something small countries could do. GGI could be the engine of that. But let me try and answer your question, if I may. We've seen the growth of the green market since I helped launch the Luxembourg Green Exchange. The market has grown 100-fold. We are now at $5.4 trillion US outstanding. Not billions, not single trillions, multiple trillions. This year alone, we will see $1 trillion of issuance. So this is now becoming substantial. Yes, it's a long way from Helena's comment about $130 trillion of bond market, which is why we are focusing on bonds. Not only bonds, but in the capital stack, bonds are the largest piece. For the investment funds in Luxembourg, there are more bond funds than there are equity funds. The pension funds of the world, the ones who look long-term, who don't just worry about next week's profits, the ones who really consider the future of the planet, they're in bonds, which is why we need bonds. And of course, sovereigns are raising money, like Ecuador, in bonds. It's clearly the instrument make work. But let's be clear. If we get bonds right, it flows on to the rest of the capital stack, as we are beginning to see. At $5.4 trillion now, we have the loan market, bilateral loans which are emulating the green bond market. In China, for example, there are 10 times as many green loans as there are green bonds because of the way banks are copying the idea. And around the world, green equity funds are now being set up, modeled on the large-scale thematic approach. Pricing has appeared in this market. When Ecuador did its first bond in the area, there wasn't a huge pricing difference. But when Brazil did its sustainable bond last year, they got 170 basis points benefit over a vanilla bond. That is extraordinary. I mean, the Germans get price difference, Luxembourg does, but that's 2 basis points. But that's a AAA. That is still amazing if you're a German green bond issuer. Here in Azerbaijan, the first green bond issued ever last month got 150 basis points preference over standard bonds they issued. Let me be clear, that's not because investors are trying to save the planet. They might like to, but they're not going to give away pricing for that. It's because in secondary markets, we are seeing improved characteristics. Green bonds perform better. People value them more. There's a long story. I won't go into it, but I can afterwards a cup of coffee. But the main point is we have this benefit coming through to the market now, which is fueling the growth of issuance, and yet investors continue to pile into it. The future. So far, we've seen green. We've seen thematic in some areas. What we haven't seen is a proper understanding of the challenges facing emerging markets translated into appetite for bond issuance. 2 months ago, we published, with UN Disaster Risk and Reduction and UN Women, a Climate Bonds Resilience Taxonomy, which is guidance for the next stage of growth of the green and thematic bond market. Yes, gender issues are central in there, but they are not separate. We do not want to grow a gender bond market. We do not want to grow a thematic bond market which is unrelated to green. We want to extend the green market, understanding that we have to address these issues. Why? Because we have failed to act on climate change. Because 1.5 degrees will be hit in the next couple of years, according to WMO. And that's going to mean a lot of volatility in our societies. Physical volatility we're seeing, social impacts, economic impacts, nature impacts. are going to become severe. We have to prepare, and that requires investments in resilience. And what does resilience mean? It means investments in gender, investments in the primary education of women, investments in health networks to ensure that in a pandemic people can keep working or at least can get help without having to spread the disease, investments in economic development of Sri Lanka, so when Sri Lanka gets hit, which it will, I'm afraid, by the climate impacts coming through, it can bounce back the next day. And that is the climate bonds resilience taxonomy. We're looking at $3 trillion of issuance over the next 5 years in a resilience theme as an extension of the already powerful existing green bond market with its liquidity characteristics, its appetite for demand. One of the first to issue under this theme will be Brazil. We're working with the Brazilian government on their new taxonomy. We're the NGO for green bonds globally and taxonomies globally. It'll be resilience focused. It'll be an extension, it'll be a green bond that addresses resilience. That's something that can work in all countries. I certainly hope that in Ecuador and Uzbekistan we'll see this. In Sri Lanka, we have to sort out the IMF issues first, but we've worked with the Sri Lankan Central Bank on a taxonomy. We have the guidance there. The next stage is to prepare for fresh markets of sovereigns. There is incredible opportunity, but I want to go back for something, a call for GGGI. Help us organise the smaller economies of the world, the nimble economies of the world, to show the bigger economies how we can really do this, including getting access to this vast green bond market we have created.
Thank you, Sean, for very thought-provoking comments here. I know that you have been involved in developing the green bond markets for a very long time, and what we see today, there's a huge contribution that came from you and creating an awareness about green bonds and also encouraging financial institutions to be part of the green initiative. I remember Dr. Claudia mentioning that we need to get a pipeline of projects, investable projects, whether that's NDCs or these financial institutions raising the money from the capital markets. They need to invest into projects that are bankable projects, and ultimately the money needs to flow into the real projects. So we have today an SQB bank from Uzbekistan here. Let's hear their experience of dealing with the green bond. And also, if you can also reflect a little bit on how do you see once you receive the money from the from capital markets into the bank, how do you plan to deploy that capital, and how do you identify those projects where you can actually invest and give returns to the investors that they are expecting? So over to you.
Thank you. Hello, everyone. I represent the Republic of Uzbekistan, SQB Bank. We work on developing our green financing area. Nowadays we have a big department in our bank which develop green products for green financing. Also, we start work with GGGI. We started to work on doing common project in climate smart agriculture in Karakalpakstan region, which helps us to finance agriculture area. And nowadays we are working on developing finance model, and after then we will do special product for our clients, corporate clients. In 2023 we issued our first green bonds, $100 million, and in 2024 we get second part opinion with the help of GGGI for sustainable finance. Nowadays we have 11.8% green portfolio in whole portfolio for bank. It is amount $564 million. And in asking your question, Mr., I would say we also work on attract money on capital market. We have our own funds, $28 million. Whole project is amount $80 million. Then in future we are ready to add our own capital for this project. So also we work other financial institutions like ADB and local our banks, business development bank, other sectors on attracting money capital for our project. And I really hope we will do good, excellent projects and best results in this. In conclusion, I would say many thanks for GGGI, Aaron and his team, also Helena. This team really helped us to do and such good results in this area. Thank you.
Thank you, Mr. Bobber, for your comments and your experience of working on with the Sustainable Trust Fund. Let me now invite Mr. Aaron Russell, country representative, Uzbekistan from Global Green Growth Institute. As one of the country programs which has received the GTF support, what has been the highlights of the support and how it resulted in impacts on the ground level? So if you can give us a little bit of a detail that how GTF actually got into the country program and how it has really created an impact, bringing in financial institutions like SQB and the benefits that they have received. Over to you, Aaron.
Thank you very much. Yes, this has been a wonderful marriage of opportunities and parallel areas of work in GGGI that have come together very fortuitously in collaboration. Our program in Uzbekistan focused on promoting investment through promoting climate-smart agriculture in a very disadvantaged and environmentally harsh context of Western Uzbekistan, a region of Karakalpak, Pakistan, a beautiful place and fantastic place to visit. This project we have a $5.6 million grant from KOICA, in which we're doing a lot of demonstration of climate-smart agriculture technologies, a lot of training for farmers and MSMEs, a lot of awareness raising in schools and women's groups and men's groups. And I think the first thing that we did was to demonstrate that these technologies work. Most people actually had no interest in climate-smart technologies because they didn't perceive a need or that it could be economically feasible. So we had a lot of work to do to demonstrate the investability of it, the bankability of the business models, and to show the significant scale of the potential for scaling up for potential investors in doing so. In parallel, we were learning from the fantastic experience of GGI in Ecuador, as well as in a number of countries in Latin America in particular, where we issued a large number of green bonds, sustainability bonds, and we saw this as an opportunity to work together with the national banks in Uzbekistan because, frankly, it was very difficult to mobilize private investment in these new green technologies that up until then. And as our colleague has said, these big bonds can lead the way. They can set the standards, and they bring in the largest amount of money that is needed for investment in that. So we collaborated with the Luxembourg team through the Global Trust Fund to bring these best practices through our the bond work that they had done in many other countries. We successfully collaborated with SQB Bank to mobilize $575 million through in the London Stock Exchange on a sustainability bond because there's quite 11 different use of proceeds with a range of objectives. And as Mr. Bober highlighted, we were always linking it to the end beneficiaries and making sure that the banks have the capacity and the tools needed to ensure that they're able to disperse those funds effectively. So we're working together with the SQB Bank to develop a climate smart agriculture finance facility and specific farmer design. So if you are a fruit orchard grower, or if you're a wheat grower, or if you have different types of farm designs, this is the kind of business plan you could develop, and this is how you could access finance. I'll just highlight a second bond that we issued a little bit later in the year with another bank in Uzbekistan, Agrobank. Now, surprisingly, you think, why do they need our support? But the appeal of climate-smart agriculture was something that was largely untapped. They did a lot of traditional agriculture that is very extractive overutilizing of water resources that are very scarce in Uzbekistan. So they were also very interested to collaborate with us, and we're very fortunate to have that partnership where we mobilized an additional over $400 million for specifically just green bond, so more limited use, of which they've targeted 80% will be focused on climate smart agriculture. So we're very this has been really through the leadership of the government counterparts. So in Uzbekistan, the Ministry of Economy and Finance plays a very significant role in guiding the actions and strategies of the banks. And through their support and through the strong leadership of these banks, we're very pleased that we've had this success, because without their leadership, that crowding in of private sector investment and for scaling up these technologies would not have occurred. So I would like to just summarize that. I think this is a great opportunity and a niche for GGI to play, that we can be the partner for technical assistance, which we do a lot of, and we can be the partner for sustainable finance. But the best partnership is the one we're doing both of them together, because frankly, there are a lot of farmers who don't trust bankers, and a lot of bankers who think the farmers have no business plan. And we cannot intervene in the sector in separate worlds. We need to bring the solutions in an integrated fashion, showing the technologies, showing the business plans, and working with the banks to bring them the solutions that they realize have an economic outcome.
Thank you, Aaron, for your comments. The floor is open for questions to the panel. If anyone has any question, you can ask now. Yes, please.
Hi, hello. Thanks for this very interesting discussion. I would like to take this opportunity with such an impressive panel to use it as a brainstorming, especially with Ecuador and CBI sitting next to each other. In 2010, Ecuador tried the Yasuni ITT initiative to find financial compensation in exchange for leaving fossil fuel in the ground. And I was wondering, and now you have Uzbekistan, and of course Sri Lanka is also a potential future oil and gas producers. I'm wondering if you could use and harvest climate bonds in some ways to help countries leave fossil fuel in the ground. Is the market ready for such new type of financial mechanisms, and will it be someday? Thanks.
Okay, thank you. I'm representing Ecuador. I didn't see you on when we get initiate this panel, but okay, from Ecuador is hard to. We have now our mitigation plan for our nation, but it's hard to maintain oil under the ground because our PID depends mostly of these extractions, no, but we are trying and we are aimed to get a transitional ecological transition to this process, because in Ecuador now we are facing hard things. For example, we're not with water. We have not enough resources to generate energy without.
But it's complicated. We already have the JET-P program in multiple countries, which has hit a dead end in Indonesia. It's been failed by the lack of government policy in supporting mechanism. In South Africa, it's a bit different because the government has realized that to keep the lights on, they need renewables, and therefore the whole idea of bonds to support transition has become much more viable. In Mindanao and Philippines, where there's only one coal-fired power plant, financing the phase out of that to replace renewables is very practical and is going to happen. So it varies. We published with a couple of other global NGOs guidance for financing of decommissioning of coal plants about a year ago. We expect to see more issuance in the area. In richer countries, we've already got the beginnings of this. So in Japan, the coal-fired power stations of Tokyo have been put into a special purpose vehicle by the government. The utilities have had to sell them, called JERA. It keeps operating them, but the ambition is to phase them out, and now they're trying to figure out how quickly they can phase it out. They are issuing bonds. We will be publishing in the methane and petroleum area in Q1 next year guidance for emissions reductions by oil and gas companies as another variation on this theme. So let's be clear. Yes is the answer, but it is complex to ensure that the underlying investments really are leading to closures and in a way that benefit the relevant country. I mean, Ecuador has to be able to make a living at the same time. So there are a lot of work to be done. The real work of decommissioning is frankly on the demand side. If we're going to decommission successfully oil and gas plants and coal plants globally, which will be a problem for Ecuador's balance of payments, I have to say, we have to stop demand in Europe, in Japan, in China, and the US. That's the main game. How do we drive that down? As we do that and grow other industries, let's say electric vehicles, at least we'll be presenting opportunities for Uzbekistan and Ecuador in green critical minerals and other things, which will give them an alternative path forward as part of the transition. The real key word here is transition. It is complicated, it is messy. We do need to do it. We cannot shy away from the difficulty here. There is opportunity to get finance across all the shades of transition now in a way that wasn't 5 years ago. And yes, you will see some bonds in this area.
Any other question from anyone else on? Yeah, okay.
Good morning, everyone. My name is Ruth Spence. I'm from Antigua and Barbuda. It's a small island, and as you know, human resources are very limited. I work with local community groups, so I basically have to wait on the national machinery, the government, the focal points, to get their financing mechanism in place, hoping that it will filter down to us at the local level that are meeting targets. But I'm not seeing very much for the Caribbean. We seem to be behind. And because the different donors want different mechanisms to be set up, new implementing, new mechanisms, for accessing the funds, it's very complicated. Are there simple mechanisms for local groups? Many people think maybe we don't have the skills and the knowledge, but we do have them to access some of these, funds, because our situations get dire each year. We need urgent support, but the mechanisms, are complicated for some of us. So I don't know what,
Thank you for your question. I don't know who would like to take that question. Maybe I can. Okay, Sean, please give it an attempt on that one, and then I will also give it to Dr. Claudia to respond if you would like to. Please go ahead.
Private capital requires a return. So investable options need to be constructed to access private capital. There are many ways to do that. I'm going to suggest you talk to David Woods from New Zealand Green Investment Fund, who is currently trying to figure out how to get investable opportunities in the social sector in New Zealand, which can attract private capital but achieve public policy objectives. It is not simple, it is difficult. For an NGO or for community organisations, the truth of it is the larger part of funding is going to come from government or public sector. So what we need is governments who understand the importance of strong community development to the economic outcomes of the country. In the resilience agenda I mentioned earlier, which is guiding private capital, it's meant to guide sovereign activity. It's meant to encourage governments to raise funds to allocate to activities that will support the strength of the society and the economy so they can better survive hurricanes in the Caribbean. Now, what do we know about hurricanes in the Caribbean and strength of society? the stronger the community it is, the better able the community is to survive, the better able the economy is to get going the next morning. From the investor perspective, the lower default risk for the sovereign bond is if we're investing in strong communities. That's you. Now that's the link we've got to make with the government. And that's part of the job in the next few years. And that should, if we are successful, find more funding allocated to activities that will create stronger societies, which involves things like the education of women, as we all know, who can better survive the crises that keep coming upon us. This is a change of government policy to respond to the 21st century of volatility that we've created.
About that, let me give the floor to one of the funding agencies here and give your comments. Yeah.
Okay. Now? Yeah. Okay. Thank you so much for the question. My name is Claudia Hitzai, Luxembourg Ministry of Environment, Climate and Biodiversity. So we got this kind of question a lot, and this is actually one of the core of what's being negotiated right now at this COP. I wanted to, point you to the local communities and indigenous peoples platform. Okay, you know. So I think that's where you can try to get advice from other local community actors that are really on the front lines of climate change. I can tell you that for the donor countries, this is something we are aware of. So whenever we give funds, it's always about investment needs, and so we always highlight human rights, local communities when we're talking to governments. So I think it's something that needs to come from both sides. So it's something we're aware of. But I've spoken to some people who have said, well, if funds always go around the central government directly to local communities, then the long-term, what will happen is that people will not expect the government to actually do anything. So that's also, I definitely recognize the issue. I know that a lot of other donor countries recognize the issue as well, because we want to where they're needed, okay? So thank you for your question. I wish you, good luck. But I think it really goes to at the heart of what this Finance COP is at, and I'm glad that everyone heard this question. So something we really need to work on. Thank you.
Is there anyone else who was willing to respond to that? Okay.
I think it's a lot of the funding that is raised through bonds typically goes through larger industries, larger farmers, and we found this issue to be a challenge as well in Uzbekistan. But I think the solutions are of helping. There's a lot of business training to improve farmers' capacities to get access to loans. But I think also there's training that we can do in support. I'm hearing myself talk. Training we can do to support banks to develop new types of lending models that are not just based on your mortgage, but based on your cash flow and based on your business plan. And governments can do a lot of support by providing alternative structures. So not just giving loans to farmers, but creating legal frameworks that allow farmers' associations to get loans, or to create different types of funding so that the smallholder farmers, I talk about the people under 1 hectare who frequently are unable to get loans, that they can work collectively to get access to loans. So there are policy solutions that need to be done in some countries, and each country is kind of different, but there are solutions that can be created, and this is something that we're working with the SQB Bank in this Climate Smart Agriculture Finance Facility specifically to help design new types of loan products, so that to be able to expand the scope of who can access those loans.
Now let me invite Ms. Kimberly.
I got the microphone, thank you. I just only want to let you know that Ecuador has worked with Galapagos Life Fund that basically incorporates the endowment mechanisms that allocates a portion of the year debt for nature swap, and that proceeds toward long-term investments. So, for example, our DNS operation concludes in 2040, and the Conservation Trust Fund can continue allocating grants in perpetually. So from the annual interest earned on the endowment, this fund designed to ensure long-term financial sustainability of conservation initiatives in our Galapagos Island. So it led us to enable ongoing support for critical projects well beyond the lifespan of the initial Day for Nature swap. And maybe you can take it like an opportunity just in case that in your country you are allowed to do one same thing.
Thank you. Is there anyone else in the audience who would like to respond to that question? Because this is a very important question which has been asked here by the beneficiaries. They're asking, while the financial institutions are raising this green finance, how that percolates down to those who actually need it. Is someone who wants to respond in the audiences on that before I go back to the panel and ask some of the challenges that comes in with the green bonds market? So while there is an upside, there is also a challenge. One of those are already expressed, that whether the money will actually percolate down to where it is required. Sean, would you like to touch upon some of the risk that exist with the bond markets, where we need to be careful, how we should try and develop this market so that one bad drop can actually spoil quite a bit of a clean water? So over to you, Sean.
Look, one of the challenges in finance, and let's be clear, finance, when I talk about it, is not the day traders, the New York Stock Exchange. It's not Goldman Sachs. I'm concerned about pension funds, insurance funds, and sovereign wealth funds. They understand that they've got to survive in 40 years, and the economies in which they invest in need to survive. The day traders, they don't care anything about 2 weeks away or communities in Antigua. They just want to make money in a hurry. Wait, let's not, they serve a purpose globally, but they're not useful to us. Institutional investors that think long term have about $130 trillion of assets under management. They're the ones who actually own everything. And they're the ones who understand these long-term risks. Of course, we have to extend them. They're not investing in Sri Lanka at the moment because the government of Sri Lanka went Turkey over the last 10 years. I won't specify the specific president I blame, but you can probably guess. And that's a challenge in every country. Investors, those pension funds, think pension funds are cautious and careful people. They need consistency. They need regularity. They need the payments to be made every month or every year without a freak out. When the Argentinian government cancels payments every few years, they freak out. And getting further funding for Argentinians for future governments becomes impossible because some governments messed it up. The UK had the same experience when it elected a crazy Prime Minister called Liz Truss, who came up for a program which cost the Bank of England £65 billion in 1 month. She was kicked out, but it ruined the UK's borrowing capacity for ages. The costs went out to borrow. So obviously, to be able to get money eventually to you in a community in Antigua, the government needs to act in a cautious, calm way. They've got to look like a doctor or a dentist who you can trust. They cannot afford to look like someone who sells fireworks. If you find yourself in government, get a suit like this man and act very sober and cautious, because that's what we need. Now, that's the same for all private investment. In the social sector, I've seen in some countries the pioneering of community-owned social housing, which has been a way of getting it out of the government, managed by an entity that is still community-owned, but is operated like a mini bank. It has a social objective, as let's face it, all corporations should have. But anyway, a social objective. It understands finance. It raises money on the public or the private markets, supported by the public sector, and it does it in a cool, calm, sensible way, while delivering services to ordinary people. There are models like that we can use in certain kinds of areas of delivery of social services. The key thing I'd say is that all of us expect our services, like doctors and dentists, to be cool and calm and not to freak out and not to do anything crazy. Because if I'm the dentist, I want to have confidence that dentist knows what he's doing in my mouth. It's the same thing with treasuries and governments. So our job is to support our governments, to support the private sector, to be able to deliver certainty, clarity of returns for the investors, and then we can make this work. This is not what you have to do on the ground, because you're dealing with a crisis all the time. You need a bit of a buffer between you and the people raising money. That's the key thing I would say. If we adopt that model and understand that model, there is actually a lot we can do. There is a lot we can do with that bridge. That bridge between how we do things on the ground, how we invest money, for example, and then how we raise it in a comfortable way to keep our pension funds cool and calm, is the art of change. And that will actually give us opportunities if we think about that application in different areas. That's where GGGI can help. That's where organisations like New Zealand Green Investment Fund, I keep pointing to David Woods, my friend in New Zealand, can help to make this bridge between these two issues. That's the key point I'd say. The future lies, because public sector doesn't have enough money, the future lies with ensuring we make common cause with the pension funds of the world. Start thinking like a pension fund to understand how to do that.
Thank you, Sean, for your comments. Let me get back to Ms. Kimberly. Could you provide some details on how this Galapagos Life Fund will operate? And one question that everyone is asking, that how this fund will operate and will perpetually contribute towards the conservation of Galapagos conservation efforts.
Okay, thank you. As I have already mentioned, the Galapagos Life Fund is designed as a dedicated private conservation trust that aims to leverage the proceeds from the debt for nature swap to attract additional impact investment for global donors committed to environmental conservation. I think that transparent governance of these incomes will attract donors committed to environmental conservation, and I think that it's crucial for us to get these incomes, no? So the fund employs rigorous financial management following the U.S. law. That ensures that resources are allocated efficiently towards strategic conservation projects. Also, I would like to let you know that the Galapagos Debt from Nature is an innovative financial mechanism that ensures $450 million of Ecuador's debt, and it helped us to restructure to generate $18 million annually for conservation efforts over the two next decades until 2040. So that's the way that we were trying to work on.
Thank you, Ms. Kimberly. Let me then go back to the SQB Bank and ask, what's your way forward? You have got the green bond issued, you received some money. Are you approaching to access more climate finance? What are your plans to look forward with, for example, with GCF? How do you see that the first mover advantage that you had by getting into the green bond space and getting the money from the capital markets, what's next for you?
Thank you for the question. I would say in 2023 we issued green bonds, $100 million US dollars, and this year we also issued more than 400 million sustainable our bonds. So our goal is to grow up our green portfolio. Nowadays, as I mentioned, it was 564 million US dollars, 11.8% of whole credit portfolio. And as my colleague said before, our government also look at this area with the help. How can I say? We also finance social projects like projects of equipments of business women, startup projects, and in this area we work with our government, also IFIs, and also use our own funds. And for we in this year, 20th October, we have met with GCF and our Minister Ecology. So GCF decided to help us to get accreditation, and we in this year we are going to start this process, and in the future we will hope we'll can attract more amount from capital market for our not only green projects, maybe I would say our other social aspects, and more do more green and social projects as well. Thank you.
Thank you very much for your comments. Sean, my last question to you on is, what's your view on sustainability-linked bonds? How do you see that compared to the other kinds of bonds that are there? There's quite a bit of a controversy around the sustainability-linked bonds, and there are a number of questions raised on whether these are green bonds or not. They are particularly green in nature because the proceeds coming from sustainability-linked bonds are not have the same governance structures as the green bonds have. So what's your views? How do you see the sustainability-linked bonds, and your views whether that should be the path for financial institutions, or they should be more cautious in this space? Thank you.
So for the audience, what's happened as we developed green bonds, we've had variations at the edges of that of new kinds of instruments. What is being talked about is a bond where an organisation, like let's say utility, makes a commitment to reduce emissions or some sort of commitment, 3 years, 5 years away, and says that if I don't meet that commitment, I'll pay you more interest. And then the investor says, in theory, oh, that's great, I'll invest in it, and if you fail, I'll get more money. Cute, right? It's a cute idea. A lot of people like it because it feels like it's keeping people honest. It's growing. There's about $400 billion of these globally, against the $5.5 trillion of thematic bonds, to give you a sense of scale. It's a useful development of the idea of capital that shows purpose. The KPIs are about public policy objectives of some, or let's say, doing good objectives for the planet. So the idea is cool. There are some issues. The first issue is that the selection of criteria, the key performance indicators, is all over the place. There's no real standards. We published a big report about this early this year. In about half of them around the world, people are picking key performance indicators that may not be appropriate. We had one oil and gas pipeline company in Canada who had some great work in 20% of their balance sheet in doing green hydrogen. When you read the prospectus of the bond, they didn't mention their oil and gas pipelines at all. And they mentioned KPIs of growing renewable. Nice. But you want to find out, because it's a bond for the whole company, what they're doing about the oil and gas pipelines. What we've said is, if you've got a robust transition plan, let's call it Ecopetrol in Colombia, that is developing a good transition plan, or the government of Uzbekistan, then yes, the KPIs around that transition plan could be good to put in these bonds. But we can't have what we call in English cherry picking of KPIs. You pick a KPI where the president of Ecuador will always wear green in the future. Is that really a KPI? Well, we've seen some bonds that are as weak as that, if you like. So we need rigor, strength around the performance indicators, so we can be sure that real contribution to change is part of this. But it's still an interesting idea. The other idea is debt for nature swaps. Now that is, if a government, this is for emerging markets, have a distressed debt situation, they can refinance that debt at a lower interest rate with the help of a development bank that'll provide a guarantee as long as they commit to some nature protection activities. In Barbados, creating a large marine reserve, for example, or in Belize, and so on. This is a small but important area because a lot of emerging markets have distressed debt situations. Neither of those two can be very large themes because there aren't many investors. There's only a small pool of investors that are interested in what will be called exotic instruments. So the bulk of investors want a standard bond for standard coupon. In Luxembourg, most investors just want the normal bonds, and that's where green bonds come in, because they're normal bonds with a flavour. But there are a class of investors that like this, so it becomes a slice of the market. It'll be 5% of the market. In the same way that in the sovereign market, inflation-linked bonds have been useful. They're issued by a couple of countries like the United Kingdom, but they still remain single-digit size of the overall sovereign bond market. Let's call it the development of complex opportunities dominated by very simple vanilla opportunities market. It's useful, but it's not going to take over the market in our view. But it's useful, and so we should encourage it, but we need standards. We need minimum requirements. This is where organisations like ourselves, like GGGI, and like the Luxembourg government actually, can help drive quality in this area and ensure that as consumers, that as pension funds, we are protected from weak claims, that the claims are strong. There is development of standards coming through at the moment.
Thank you, Sean. It's good to be cautious about how we develop this market. I think there is a need to bring some discipline in the way this market should be developed. Otherwise, there are risks associated with that. Are there any more questions from the audiences, or we should go towards the closure of this session now? Any questions from the floor? All right, so let me start by thanking all the panelists for your comments and for your views. They were quite insightful, quite enlightening, quite thought-provoking. Today's discussion, we are reminded that there is a significant gap that persists in achieving the Sustainable Development Goals and fulfilling the commitments under the Paris Agreement. Helena this morning mentioned that we need trillions of dollars to meet these commitments, but this gap can be bridged with the participation of private sector. The public sector financing is just not enough. We need bold, creative, and inclusive solutions. Solutions that can leverage the power of global capital markets and align private sector interest with the sustainable development outcomes. I would like to thank you all for participating in this wonderful conversation, and we close the session now. Thank you very much.